An investor sent me a list of stocks weeks ago, and two of them have increased over 2,000% in the last 5 years alone. All of these companies are in the business of building out data centers and AI, and they have proof that this AI build-out has already paid off at least once at scale. And the real question is, who takes it into the next chapter? So I took his list and found quite a few more. So in this video, I am going to be talking about 10 names, most of which you are going to be brand new to. And remember, it's always good to know these names, but wait for the right time to buy once you've done your research. So before we get into this, I just want to say I'm not a financial advisor, and this is for educational purposes only. 4 layers of infrastructure before any of it ever hits a single server rack. And with the biggest names in tech throwing money at AI, are we talking about the contractors that actually build the data centers or the equipment inside of them? And then there is, of course, the cooling equipment or the hidden layer of fiber materials and the on-site power. So I'm going to walk you through the best names for each of those layers. Let's start with Tier 1, the guys who actually build the data centers. This year, hyperscalers, Microsoft, Amazon, Google, Meta, and Oracle are spending over $700 billion on AI infrastructure. And this is not a one-year boom. McKinsey predicts global data center investments will reach $7 trillion by 2030. Most of the companies on this list already have orders in the books through 2028, and that's 23% of the total US GDP for 2025. And someone's got to physically build all that stuff. First on this layer is Comfort Systems USA, which installs the mechanical, electrical, and plumbing systems inside hyperscaler data centers. A fix is who you call when a hyperscaler wants one company to do it all in the building. What they've done is revolutionary. Data center customers were a third of revenue. Now they are over half of their revenue in the last quarter. And Fix closed with a record $12.4 billion backlog, nearly double year over year. As some background, a $1,000 investment in Comfort Systems in the spring of 2021 would be worth about $22,000 today. That's a 22-bagger for an HVAC contractor in 5 years. Honestly, who would have thought? And here's the twist. At that time, the operating margin more than doubled. The return on invested capital is 62%, and they have almost no debt. This is the economics of a mechanical contractor at a software company. Next is IES Holdings, which provides the electrical work that keeps data centers powered, the fiber, the low-voltage systems, and the wires and boxes that connect the racks together. Their telecom sector focuses on data centers, and the numbers have been unbelievable there, and their combined backlog rose 62%. The IESC is now different in its size. They trade at about $12.6 billion market cap, so they're still small enough to compound aggressively if data center construction continues at this pace through 2028. 5 years of revenue compounded at 23% annually, and operating margin nearly tripled. And the earnings per share have almost multiplied 8 times, and that is what makes this stock a 10-bagger. Quanta Services is number 3 on this list. It is the biggest pure-play infrastructure contractor in the entire sector. Works on power transmission, communications, and energy infrastructure for hyperscalers, utilities, and large industrial customers across multiple sites simultaneously. They're the public company that hyperscalers and utilities call when they need $1 billion of work coordinated across cities. Here's the stat you should be looking at. Quanta's backlog now exceeds $48 billion US dollars, which is more than the total market cap of most of the companies on this list combined. Management raised its full-year revenue guidance to the $35 billion range, and a lot of that backlog is in long-term master service agreements, not just a one-off type of project. That is the kind of revenue visibility that ensures years of forward earnings. The data center segment represents around 10% of the total backlog. Quanta also announced public strategic partnerships with American Electric Power to support AEP's $72 billion capital plan, including the transmission infrastructure supporting the data center market. At its heart, Quanta is a story of scale. Revenue compounded at 20% a year for 5 years, and the stock is up over 7-fold since 2021. Quanta is the credibility anchor for me on the whole AI buildout. When hyperscalers invest in real construction, Quanta receives a significant portion of that funding. Now we get to Tier 2, and that's the equipment that goes inside buildings. Switchgear, transformers, power distribution. All the hardware that every data center needs, whether the racks are full of NVIDIA chips or AMD chips. Powell Industries leads this layer, designing and manufacturing high-voltage switchgear that manages the flow of electricity within data centers, utility substations, large industrial sites, and LNG export facilities. By 2022, Their CEO started to align the company strategically with hyperscalers and colocation operators, and the financials are indicative of a total reinvention of the operations. Powell was a small-cap nobody in early 2021 and has grown so far and so fast that the company's had to do a 3-for-1 stock split. And here is where the story really unfolds. In fiscal year 2021, Powell was basically break-even, and their operating margin was almost zero. 4 years later, that operating margin has expanded to nearly 20%, and revenue has more than doubled. That's exactly what an industrial pivot to data centers looks like when the execution just nails everything just right. Their most recent quarter cemented the trend. Powell closed with a record $1.6 billion backlog and new orders up 63% year over year. That would be the biggest quarterly bookings in more than 2 years. Then there is Eaton Corporation, which manufactures the power management equipment in every major data center on the planet. It is, in fact, the switchgear, the busways, the UPSs, and the electrical distribution gear. Every hyperscaler build specifies the product's greenfield. The biggest name on this layer is Eaton, with a market cap of over $167 billion, and data center orders were up more than 200% year over year in their most recent quarter. Electrical America's backlog hit a record $13.2 billion. The management has noted that the backlog for data center construction exceeds 10 years of normalized build rates. Eaton has acquired Boyd, a leading liquid cooling company projected to achieve $1.7 billion in annual sales. That's over 80% of it coming from data centers alone. Over the last 5 years, their operating margin has expanded from 19% to over 24%, and the earnings per share have about tripled. The stock is 3 times larger than it was in 2021. And it's a compounding that's rare for a $167 billion industrial company. This is especially true with momentum still building in the data center space. And here we are at Tier 3, which is scary. The new generation of NVIDIA AI racks draws 132 kilowatts of power. That's nearly 10 times what a traditional server rack consumes. In the most blunt of terms, air cooling just can't handle that. Liquid cooling is the only option. Modine Manufacturing leads the pack of coolers by designing and building the liquid cooling distribution units, immersion systems, and thermal management gear that the new generation of AI racks cannot operate without. By the way, these are the smallest pure plays in this video. And the financial transformation from boring auto supplier to AI cooling specialist is the most dramatic change of all in the entire basket. Just look at where Modine was 5 years ago. Fiscal 2021 was a complete disaster. Operating margin was negative 5.4%. I mean, they were literally out there for the taking. And then, of course, 4 years later, operating margin has moved into positive territory at 11%. And we've gone from a loss of over $4 to a healthy profit for earnings per share. And the stock is up some 17-fold. The data center pivot is clearly driving the company's growth. In their most recent quarter, they saw a 51% year-over-year revenue increase in climate solutions, and data center sales were up 78%. Next on our list of cool companies is Carrier Global, one of the world's largest commercial HVAC companies, building commercial and data center cooling systems at scale. There is another kind of pick, the other names on this layer. About 55% of it is less than 5 years old, and this number is the lowest in the whole video. They did see a margin actually contract from the high teens to less than 10% as they integrated the Weissman acquisition and sold the fire and security business altogether. What does Carrier have on this list? Just look at their last quarter. Global data center orders are up more than 500% year over year. And of course, I also like to look at the data center backlog, which now fully covers their $1.5 billion full-year sales target and has room to beat it. Their integrated Quantum Leap data center offering, which combines precision chillers, coolant distribution units, and building management software, has booked some $300 million to $400 million of orders in its first year. Carrier teams up with NVIDIA to design cooling for next-gen AI infrastructure. Now we get to the fourth layer, which is the hidden layer. Here's the fiber, here are the cooling bits, here's the power behind the meter. This is what makes all of this work. But that's also a step or two removed from the GPU and doesn't show up in most analyst models. The first name on the hidden layer is Belden, the maker of the data center fiber, the high-speed interconnects, and the cabling that physically links the GPUs inside the hyperscaler campuses. The broader business includes industrial automation, broadband, and smart building infrastructure. Belden has been a steady recovery story since 2020, with revenue compounding at around 9% annually, operating margin expanding from the high single digits to over 11%, and the company moving from a net loss to solid profitability. It has solid performance, but it is not the fireworks of the small cap names of the previous layers. And now this is where it gets interesting a little bit. Belden reported its latest earnings on the same day and said it is buying Ruckus Networks for $1.8 billion in cash. That's 40% of Belden's market cap for a single acquisition. Ruckus is adding Wi-Fi 7 access points, enterprise switches, and cloud management networking to the company's existing fiber backbone. Belden is on the verge of becoming a full-stack networking infrastructure player instead of just a cable company. The stock took a pretty hard hit on the deal because the market doesn't trust this integration yet. Belden is trading at one of the cheapest forward multiples in the basket, at 15.7 times its forward earnings, despite producing revenue growth north of 11%, while every other name in this video is making new highs. This is not one you want to go into blind. You want to watch it and do a little research on top of it. The next layer is invisible. Mueller Industries, the only vertically integrated manufacturer of copper tube, brass rod, and forgings in North America. They supply critical cooling components for the plumbing, HVAC, refrigeration, and industrial systems that the data centers rely on. Q4 was fantastic. Net income increased nearly 52%. Diluted earnings per share were $2.16. Gross margin grew by nearly 300 basis points. Mueller also increased its quarterly dividend 40%. This marks the 6th straight year of double-digit dividend increases. That's the kind of capital return move you make when management is very confident about future cash flow. Here's the real story. Revenue grew at a compounded annual rate of 12% over 5 years, and operating margin almost doubled to over 21%. Earnings per share went up more than fivefold. The stock has surged more than 6.5 times since 2021. Last on the hidden layer is Bloom Energy. Bloom Energy designs and manufactures solid oxide fuel cells that generate electricity on site, behind the meter, and without even waiting for the utility grid to be hooked up. In the whole market, they are the only pure-play publicly traded behind-the-meter power generation for data centers. They beat consensus estimates in their latest quarter. Revenue was up 130% year over year, and gross margin was 31.5%. But that is where they shine. Oracle has agreed to buy up to 2.8 gigawatts of Bloom's fuel cell systems, in addition to 1.2 gigawatts it is already contracted for. And now, more than half of Bloom's data center backlog is from hyperscalers and neoclouds and co-location providers apart from Oracle. They are expanding manufacturing capacity to hundreds of megawatts per quarter, with a total contracted backlog of approximately $20 billion. Thanks for watching. Please subscribe to the channel.